Stock markets are recovering from the tariff jolt across the world. The sensex and the Nifty are up over 4% this week, the biggest weekly gain in 2 years. Dalal Street is now back to levels seen in January of 2025, before Donald Trump assumed office as the US president. So is this recovery sustainable? What next? Well, you're watching Editors Roundtable. I'm Surabhi Upadhyay, and with me as always are Prashant, Nimesh and Nigel. And today joining us on the show would be Harish Bihani, Senior Fund Manager at Kotak Mutual Fund. But guys, what a super week. 3 days, turbocharge, and the bulls are back.
Bulls are back, and how? I mean, from the lows, Nifty's up 2,000 points, and nobody realized. I mean, everybody was, cautious, careful, not committing capital. And so we are back to 23,800 from 28,800.
Phenomenal.
Phenomenal
and
move.
I think
Phenomenal
the consensus mood also, just this last weekend, it's not as if there was no big teasy mood or anything.
People generally were
chalega, dhire chalega, but
one needs to be careful,
cautious. Just this weekend.
Yeah.
And 3 days markets are up. Bank Nifty is up 6.5%.
Yeah.
Nifty is up 4.5%.
And look at today's market. Just we have a 3-day long weekend, right? A truncated week. And on a day like this, the Nifty to close 2% higher, Bank Nifty to close 2.5% higher. When we know that there's going to be a 3-day holiday and we don't know what's going to come from the global market, that's to my mind was a big surprise today. Nobody expected such a move today.
The other thing is gold, right?
Yeah.
I mean, I was thinking gold last night was up 3%. I mean, that is 3% on gold after such a large move. It's a safe haven.
Yeah.
And you need safety when there is risk everywhere else.
But equity and gold both moving together.
That's the thing.
That's a surprise.
It's been absolutely phenomenal. And let's not forget flows. I mean, the FPI flows are back. Large caps are dancing, and the party, for now at least, seems to be on.
Well, that's right. And you have that benefit, right? Because the FIs were net short.
Yeah.
And then, in fact, you have them showing us the money in the cash market as well. Always feels good. And I'll tell you what, earlier we went to 21,900. Then we saw a 1,000-point rally. And everyone says second dip is coming. Second dip came. And people said, no, now we'll get a further dip. I don't know whether that's coming or not. But, you clearly missed out if you're sitting on the sidelines. And I think, those monthly installments should keep going, because then you get the best entry point, I think so.
Absolutely. Okay, so what we'll do is I'll quickly recap in numbers what we've been discussing, and then we'll straight away get to the conversation with our guest. It's been a solid showing, like we're talking about it. 3 days, and look at this. The Nifty has not only recovered all the losses from the 2nd of April, it's actually trading 2.5% above that level, 23,800. I mean, this is what we're talking about. And on Thursday, which was the last trading day of the week, the Bank Nifty was just shy of hitting its all-time high. So this is how it's been. India, by the way, is leading this global recovery. If you look at price moves across the last 5 trading sessions, X of all the holidays, just 5 trading sessions. Then China, Shanghai Composite is up about 2%. The Japanese market also recovering, but more measured, 1.3, 1.4%. The US market is still struggling because of the up and down. The S&P 500 is down about 1.5%. And look at the Nifty, 5 trading sessions, 6.5%. That's the kind of impetus that we're talking about. Now, this recovery is definitely backed by FPI flows, because we've had a couple of very large days in between. One of the days, it was 6,000 crores of buying. Another day, it was over 3,000 crores of buying. And it's really showing up in large cap stocks, particularly in the financials. They have taken on the leadership mantle, and they're making sure that while IT is faltering with a lot of questions, the market itself is running higher and higher. So for the week, the Nifty Bank, 6.5%. Nifty Private Bank, almost 7%, and Nifty Financials, go beyond the banks, go look at the non-banks and the NBFCs. Even this index is up about 6.2%. As a contrast, Nifty IT is up 1.6%. Actually, no sector has ended negative this week. IT is the least performing, but even there, the gain is about 1.6%. What are we looking forward to? Well, we'll definitely be looking at the earnings over the weekend. Infosys, HDFC Bank, ICICI Bank, earnings continues to drive the market action from here. FPI flows, will we keep getting in those big 4-digit buy numbers or not? And last but not the least, we can't fully ignore the global headlines, right? Because a lot is still up in the air. And next week, we'll have the US Vice President, J.D. Vance, in town, not particularly in Mumbai, but he'll be in Delhi and in Agra. And the market will watch out for any clues on the progress in the India-US bilateral trade agreement. So plenty to keep us busy next week.
Plenty and more. Let's bring in, I think, Harish Bihani, who's with us, Senior Fund Manager at Kotak Mutual Fund. Harish, good to have you with us here. Thank you for joining us. We are the big market, the first major market to get back to pre-tariff levels. Nifty Bank is almost at new highs. What are fund managers across schemes at Kotak been doing? Give us a sense.
No, it's amazing what's happened over the past few weeks and months. And if I had told you, Prashant, say about a month back with the benefit of hindsight, that there'll be a significant US tariff across the world and how will markets behave, in all likelihood, your and all the other answers would be the market would correct fairly sharply. And here we are at this point in time, and markets are up about 6-7% from about a month back. If I had told you again about a month back that if this happens and then US dollar will go down, US bonds will go down, and US equities will go down, and how will Indian markets behave? And again, we would have got a fairly similar answer that Indian markets will come off. So we have fairly interesting times. The entire narrative that is getting built up is that US exceptionalism is over. And with that, a lot of financial capital that used to move to US will look to go to other emerging markets and other markets, which are growth markets, better return on equity markets. And that particular narrative is gaining prominence as we speak. Very, very early days. I think that this is a long way to go. Still, despite all the impact that India too will have in the near term with regard to growth slowdown. If global economy is slowing, India will certainly see a growth slowdown. We'll see earnings cut in the coming earnings season. So we'll certainly have a lot of impact in the near term. Is market looking beyond the near term and thinking about medium term? We'll need to see very, very early days. But we should be prepared for earnings cut and slower growth in the coming quarters.
Well, that's right, Harish. And if you look at it, quarter four is not going to be anything great, in terms of earnings. So it appears the street is looking ahead. I guess the commentary could be positive because of the kind of capex, push that we have seen. The RBI rate cuts as well will help our cause, particularly for the latter part of this fiscal. But Harish, I wanted your view on banks as well as financials. First, I just wanted to, brush through what happened in the past week. The Nifty Bank financials, well, they were really the ones that took this market higher. You have the FI flows that are coming back in. Remember, most of the holding of FIs is in banks and financials. So when the flows come in, it obviously helps the Nifty Bank. And that's why now the Nifty Bank was a couple of 100 points away from the fresh all-time highs. Besides that, you also had the RBI governor when he cut rates. He was sounding very, very pro-growth. That definitely helped sentiment as well. But there were two big factors that played out in this week. HDFC Bank, they went ahead. They cut the rates by close to around 25 basis points. Remember, it was at around 3%. They brought it down to around 2.75% on. They had some cushion out there because the other big lender was SBI. They were already sitting at around 2.7%. So that's why they had a bit of a cushion. So even after this cut of around 25 basis points, it's more or less similar between both these two. Macquarie says because of this cut, well, the cost of deposits goes down a little bit. And that's why they're saying NIMs could go up by around 5 basis points. Remember, that's one of their biggest overweights Macquarie, the sell side report had mentioned. Well, the other big cue was IDFC First Bank. Nimesh had alerted us there's likely to be some kind of infusion. There's likely to be some kind of preference. And that's precisely the way it played out. They said they're going to be meeting for a preference issue. They have issued close to 7,500 crores or two marquee names. You had Warburg as well as Adya coming in there and pumping in close to around $1 billion or thereabouts. Now, how does this change things? Well, rough calculations suggest that the net worth goes up by close to around 20% or thereabouts. And we had a chat with Mr. Vaidyanathan, and he said that in fact, the capital adequacy ratio will go up by around 300 basis points or thereabouts. You have equity dilution to the tune of close to around 15%. And he's saying there will be better times to come. Profitability is something that he's focusing on with better return ratios in the times to come. So clearly, those are the big two talking points. Lowering, the deposit rates as well as the preference issue to IDFC First Bank. Harish, how do you read this? Big funds coming in there, signing $1 billion check for a private bank. Well, that definitely gives you some kind of confidence. How would you view this, and how does this change things around? There'll be a couple of other banking names in there that are trading at similar valuations as well. So do you think interest will go up from here?
I think we are cautiously optimistic on the banking names. And I was speaking to someone yesterday, and we were discussing that is the narrative catching up with the fundamentals, or will fundamentals improve significantly from here on? Clearly, it's more of narrative at this point in time, because if you look at there are positives and negatives, maybe the negatives outweigh the positives at this point in time. First of all, as we spoke, if you look at the global growth, we'll certainly see weaker global growth in the coming quarters. And weaker global growth will flow through to the Indian market too, and which will have an impact on the overall credit growth. Second is that large banks will have NIM pressure from a repo rate cut. So if there is weaker global growth, it will lead to higher repo rate cut, about a 75 to 100 bips. Some people are expecting even higher. Let's assume a 50 to 100 bips, which should also lead to a NIM contraction, all else being equal. People got excited by a 25 bips SAR cut, rate cut, but that will not do much. Finally, what we'll all have to look at is whether the core deposit rate cuts is happening or not, which is clearly not happened at this point in time. It's happened in some one-off schemes, but the core deposit rates are still similar versus what it was a couple of months back. So that is what we are watching at this point in time. Narrative is playing up much more versus fundamentals. When you look at the positives, I think from a positive, we're clearly seeing that the RBI has clearly indicated both with its intent, and it's already reflected in terms of the overall liquidity improvement, whether you look at open market OMOs or whether you look at many other measures that have been taken. We have a couple of more measures which will help improve the liquidity. First, in May, we'll have RBI dividend coming through. Most market participants are expecting a 2.5 lakh crores of RBI dividend. Second is we are expecting the central bank spending to improve in the coming quarters. That should also improve liquidity in the system. Third is that despite the entire global volatility, rupee has behaved very well, and that also has a bearing on how and will RBI intervene in the currency market or not, which is a bearing on liquidity. So liquidity has certainly improved, which has helped the overall narrative. On average, I think that valuations have moved up for private banks, and maybe with the catch-up that has played out over the past 1 month, we'll take a pause for the time being.
By the way, I just want to say, guys, Donald Trump has woken up.
Oh, is it? Has he tweeted something fresh?
And he's going after Powell now.
So
He wants the rate cut, or Powell has to go.
Even earlier he said, right, don't play politics and all that. It's time to cut the rate.
That's
What
not the
is he saying
important
now?
point. The point is it is 3:30 in the morning in Washington, and he's up and he's tweeting. They says the ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, that's the nickname, I think, who's always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil is down, groceries are down, US is getting rich in tariffs. Too late should have lowered interest rates, like the ECB long ago, and he should certainly lower them now. Powell's termination cannot come fast enough.
Ooh, that last line. I mean, it's just so much for the freedom of central banks and monetary policy makers.
I'm just thinking, it's 3:30 in the morning. But I think as Trump famously back in the 90s, I think on the Oprah show, back in the 90s, he once claimed that he said, I don't need too much sleep. I'm built different. So, I mean...
And market participants are just kind of bracing themselves for the open. But yeah, it's really incredible. I mean, Harish, just comment on this. We're talking about, of course, the Indian market recovering and rejoicing, and we want to go back to looking at earnings, our own domestic issues. But this worst of the global volatility, do you feel that this at least is over?
Very difficult to say, but given the noise that was created post April 2nd, market participants are presuming that we'll see some kind of relief in the coming quarters. On average, we'll see more deals, tariff deals. We're already talking about early deals with Japan, with a couple of other countries. So the noise will keep reducing. And as we see some deal signing, hopefully better sense will prevail and we'll come to a normalized tariff, which is win-win for both the parties concerned. So that's very, very important to see, because Fed finally, we were speaking about Fed a couple of minutes back, Fed can't do much if there's a scenario of stagflation in USA, right? So we'll need more help from Trump and his team to ensure that global market stabilizes, and then we'll have to see how it impacts growth, earnings outlook, and take a call on both the Indian and global markets.
Okay, all right, Harish, stay on. We've got Nimesh with some analysis. Nimesh has been looking at some of the leaders
Yeah.
in individual sectors. So what is this
No,
analysis
so
showing
Surabhi,
up?
so I was just looking at some data, and if you look at the stocks which have hit all-time highs this week, all are sector leaders within those sectors, right? So if you look at, say, Indigo has hit an all-time high, leader in aviation. HDFC Bank, the leader of banking, has hit an all-time high. Eicher Motors in autos has hit an all-time high, and so is Bharti Airtel in telecom. So all 5 leaders within the space have done an all-time high. But that's not the story. The story is within the sectors itself, there has been a stark difference between the leaders and the peers as well. I'll just identify within those 4 names, right? Look at Indigo. Y2D returns. Y2D, the Indigo stock is up 15%, whereas SpiceJet, even after the fundraise, is down 12%. So that's the kind of divergence we've seen within the aviation stock. Second stock is Bharti Airtel. Y2D, the stock is up 17%, whereas Vodafone Idea is still down 10%. HDFC Bank, Y2D, the stock is up 6%, and Bandhan Bank is down 1%. And so is the case with Eicher Motors. The stock is up 16% Y2D. At the same time, Ola Electric is down 41%. This is the Y2D data. But even if you look at a longer period, say 1 year period, that gives a similar story. The leaders have actually outperformed in this market. Indigo in last 1 year is up 47%, whereas SpiceJet is still down 20%. Bharti Airtel, everybody's chasing the Vodafone story and AGR and whatever. Bharti Airtel last 1 year is up 47 versus Vodafone Idea down 45. So the alpha is almost 90% if you're in the right stock in the right sector, right? So that's the story there. HDFC Bank, the stock, Y2D, the stock is up 27. Bandhan is still down 8.5%, 9%. And even in Eicher Motors, Y2D, the stock is up 30%, whereas Ola Electric, which all the fanfare, is down 34%. So even in auto, the alpha could be as high as 70% if you're not in the right stock or if you have to be in the right stock. So what is the key message? In uncertain times, normally the market seems to chase the leaders or hide with the leaders. So that's one big message. The other is, it's a very old saying, the turnarounds rarely turn. A lot of people bet on these turnaround stories like SpiceJet and Vodafone, but the fact is if you stick to the leaders, you normally make a lot of returns. So that was a key message. I was just looking at not all-time highs which have hit the stocks, but within those sector leaders, it's definitely the sector leaders which have outperformed the peers in a very big margin, especially in these uncertain markets.
Okay, so the big boys are standing up tall and they're shining bright.
Absolutely.
All right, interesting observation. We do have to take a very quick break, but we'll come back on the other side and continue this conversation.
Okay, welcome back. You're with us here on Editors Roundtable. Harish Bihani is with us. Harish, that interesting piece which Nimesh put out, right? And that message is clear. You in uncertain times, you want to bet on a proven thing, a certain thing. And the number one player in each of these 4-5 sectors which Nimesh pointed out has done far better. Even though as people have tried to do a little bit of this, a little bit of that, trying to see if something works out, buy cheap, etc. It's not really worked. It rarely works in that sense. Any thoughts, Harish?
No, absolutely. It's very simple, Prashant, that if you look at post-COVID, there was a lot of mean reversion that happened in many, many weaker companies. And why does that mean reversion happen? Because the previous sins of the past cycle that you had done got cleansed, whether it's the banking sector or any other sector that you take into consideration. Once that past sins have been cleaned, you start with a fresh slate and you start seeing an earnings improvement. And your earnings improvement from a low base looks so good that markets start getting excited. So that entire trade played out over the past few years. We've come to a point where that mean reversion trade is over, and which is why people talk about that value trade versus a growth and quality trade. It's very simple that value trade has already happened. It's more about growth, more about quality at this point in time, because the mean reversion that happened in the past won't play out in the future. And that's the very reason why all the names that you showed, whether it's the top banking names, top telecom names, or in any other sector, the leaders are going to take more prominence. And that will help happen across sectors, across companies as we go ahead.
Okay, all right, Harish, take that point, and thank you very much for joining in with the perspective on the market and the recovery that we have seen today. Thank you very much for being with us. So the good news, guys, is that the tweets are coming and the Truth Social posts are coming. But our
But we are
market is
having
shut for
holiday.
the next 3
Yes,
days.
3 days.
So,
We just have
yeah.
to relax for next 3 days.
And I think Nigel
Enjoy
has
the
some big
match.
plans, especially on Sunday.
No.
Oh, yeah.
Easter Sunday.
You lost 5-6 kgs of weight. You've
So
not-
what's happening on Sunday?
not
Where's
had
the
for
party?
long. So, yeah, good time.
I'm feeling healthy, so I'm wondering whether I'm going to go party or not. But
We'll find out. I'll call you.
good to lose some weight. But markets have been good. For the European markets and for Western world, they'll be shut actually for a longer weekend because they have Easter Monday as well, holiday. So I'm off. All the best to you guys.
We'll deal with Trump on Monday.
I think Trump on Monday and Nigel is back on Tuesday, right?
Yeah.
So, yeah, I mean, enjoy that one, Nigel. I think we'll wrap up things here on this edition of Editors Roundtable. More news and updates follow on the other side. Stay tuned.